4.5. I took them off at 3.5. I put actually some more on last night when they gave me one shot. I didn't have them on day. It was just a sense. I'm more upset that I don't have the 210 on or the 2.5 even more so, because again, he talks and the curve steepens. And it spent the last 2 weeks flattening after the initial steepening effect, as the market, especially after the unemployment number, we saw a lot of flattening.
Well, the bank stocks aren't buying it.
Well, no, they are. They're reacting to a lower interest rate environment.
Yeah, that's what I mean.
They're trapped like rats. You know.
Yeah, they're all down.
Yeah, the minutes come out, I think, in a couple of minutes, right?
Yes.
Yeah.
6 minutes.
And as I talked about on that podcast, that was actually, I'm going to tell you, for time served, and it was probably the best podcast I think I ever sat in with. Not that I agree with everything. David Rosenberg's been very offsides here. He's a very good economist, and he's got a great historical precedent. But he's, as you can tell, he's very negative on the global economy, but he's been that way for a year. And it's only recently on CNBC they've just been beating the hell out of him. But he still doesn't make him not a good economist. He's a very good, very good. And he's going to be right here. He's just a little bit early.
Yeah, he was right. He was right in the fourth quarter.
He was right in the fourth quarter. And then, of course, when everything else turned around, because the Fed turned around as he thought they would, he'll be right. He sees, because he does some really good metric analysis, and he has for 30 years that I've read his stuff, 25, 30 years. So I like being with him. And Bookfire is just really good. He's really growing into his role and building a business, and he's good. He's good at it, and he manages money on top of it. So that gives him a lot more credibility as far as I'm concerned.
I mean, the challenge, right, Ira, is, I mean, look, David Rosenberg is trying to put together I'll call it an intermediate term forecast, right? And then there's the day-to-day, week-to-week price action, which is a different animal altogether.
Absolutely. And therein lies the difficulty of this entire business, always.
Yep. No question.
And then you got everybody who wants you not kick your teeth in to show how much smarter they are than you, which is fine. That's the way the market works. I understand it. And especially like some of the people on CNBC who, my problem with CNBC is that the anchors will always show you how smart they are. Well, you know what? I'm not turning on for your opinion. When you have good guests who I want to sit and listen to, but I don't want your opinion. It's worthless.
Yeah, you mean like Joe Kernan talking about the Dow in terms of points instead of percentages?
Listen, I'm going to pick on Ron and Sana because I don't like him. I've never liked him. And when he actually went to try to trade, but he once made a comment that my phone was ringing off the hook, because most people know the way I feel about him as an analyst. But when they had him on, because somebody at CNBC, and I don't begrudge a guy making a living. I'm okay, but as I say, he's got pictures of somebody because they've dragged him out year after year. So somebody's really a friend of his, because whenever he goes away for a while, then they bring him back. But he was talking one day. So they asked him. Well, he said, in my virtual portfolio, I said, what's a virtual portfolio? I have a virtual portfolio in my mind too.
You know what? Let's go back to Rosenberg for a minute, because I think that warrants a more detailed conversation. So I think what's important is to look under the hood, okay? Because everybody, when they talk the market, well, which market do you want to talk about? Do you want to talk about the bond market, the gold market, REITs, utilities? Okay. And when it comes to treasury bonds, utilities, REITs, those are the areas that Rosenberg has been emphasizing, okay? And those, quite frankly, are the outperformers since the September all-time highs of the S&P and the Dow and the transports, right? So if you're invested in those things, you're doing just dandy. It's not just okay. So I personally don't say David's wrong. I want to look under the hood and see, okay, what specifically has he been advocating and why? And in that regard, he's been spot on. Everybody else wants to cherry pick the S&P being up 18% year to date. Okay, but where were you, on September 30th? All these people are right. All everyone's doing is trying to make up all of their losses from the fourth quarter. That's it.
Right. So that's really a great point, because really, when you look at it, if we add in dividends, it's been a nice return. But for the most part, what are you up? Really, 3%, 2% from the October 3rd highs. What was that number? It was 29.
It's not much. It's not much.
It is not much. So, and that's if you buy dividend stocks. If you're not in one of these passive funds where there may be no dividends, but you're in growth. Okay. Yeah. Some of the leaders have done amazingly well. Great.
I mean, look, now, the SPY year to date is up, let's call it 19.5% without dividends. Okay.
Wait. Pay attention here. The minutes just coming out. So, so let's see where the market reacts.
So let's smoke exhaust fumes.
Well, gold's going.
Well, gold has been going all day, Judd. And again, it was Asia selling it last night, which was interesting. Right out of the bat. I mean, gold was down. Silver kind of held in there. Where I usually would use that opportunity to be long, to buy the gold because it had a nice break. I had too many gold Swiss on that I had put on once the gold rallied and closed higher on the day, made me a little bullish. But it really didn't resurrect itself until Powell's written statement came out, which I can't stand, that it comes out at 7:30 in the morning, an hour and a half ahead of time. But that must be because he knows it'll be leaked out of Congress anyway, so he tries to get ahead of it. So that one I won't be as hard on, but I don't like that all this stuff gets
some of the stuff that we looked at. I'm going to try to put these spreads up again for you.
Yeah.
We were looking at gold, Nikkei, gold, DAX.
Yeah.
Gold DAX, gold Nikkei.
Yeah. Give me a second. I'll pull them up.
Judd, I sent you those chat lines this morning about the Canadian.
Right.
Because when I read the Bank of Canada statement, I mean, the Canada got whacked, but I didn't care because I had wish orders in to buy it down at the 200-week moving average, which in the futures I'm talking about. It's in the cash too, but I'm trading futures. Here, I'm getting some stuff on the minutes right now. Many Fed officials saw a stronger rate cut case amid rising risks. Many saw inflation expectations inconsistent with 2% goal. Several officials saw near-term. Now, I'm telling you, as I talked about with Rosenberg and Bookbar, these are sanitized. The minutes reflect whatever the chairman wants it to reflect. There's nobody else writing this except him and the recording secretary of the Fed. So these minutes reflect what he delivered to Congress today, which is interesting that the market's gaining more gravitas from it. But I know that these are sanitized because a guy who was a vice chairman of the Fed actually said it to me, Don Cohn, who should have been Fed chairman, by the way, instead of Bernanke, except that because that was Greenspan's choice, from what I understood, to be. Because Don Cohn was a great Fed governor, great, and that's from people I truly have hold in high regard when it comes to monetary policy. And but there was no way that George Bush was going to let Alan Greenspan pick his successor because, the Bushes hated Alan Greenspan. You know that. Hello.
Yeah, I'm here. I'm listening.
Okay.
I'm trying to type.
Yeah.
Which I'm capable of. I put up the Canada, so that's got no RH day, and that's just ripping with oil now.
Yeah. Well, forget about it. It's just that if you read the statement, it just was not. Although I sent David Rosenberg a note, I said, "Am I missing something there? I read this statement 3 times. I don't see the dovishness," and he said it's dovish. And so when I pushed him on it, he said it was dovish because of. See, and this fits David's narrative that he's not wrong on the narrative. Narrative is absolutely right. But he talked about that the fact that they talked about, threats to the global economy in there as dovish. I didn't make that as dovish. They held rates, and they were the first bank statement that didn't talk about the currency. And the Canadian, relative to where it's been all year, is on the stronger side rather than the weaker side. So. I just hear, I'm going to read you exactly what he said to me. Let's see. So they're basically saying exactly what Powell testified to today. That's the way I read this from the minutes. And it was interesting that the copper held all day today. But I actually saw more
last night against everything.
Yeah, right. And I find it interesting because the copper seemed to be more with the soybeans based on the concept of the Huawei news. Because I kept going, why was the stock market up early last night? And then, of course, it was, that supposedly Trump had softened the restrictions on Huawei. So, okay, I got that. So, yeah, the Canadians actually going to make highs. But I loved, as I told you, that CAD Swiss chart.
All right, let me pull that up.
It's a really nice chart. Daily is just starting. Look at that formation there.
Yeah, there's the weekly.
And you see where it came down today.
Oh yeah, well it came right down to momentum, and
yep.
The averages is a perfect spot to hold.
Yeah. And I kept sitting there buying, and I go, and it took so long to develop. And you know what? And Canada it's been like the rule. It hasn't really traded with the oil for a while. Now gold's making highs.
Yeah, well, above 14.14 is a massive breakout in the gold now in all the charts.
Yeah. Yeah, I see that.
Closing today higher on the quarter, it's Rip City.
And what was that price level you would put up?
14.14.
Yeah, it's a good place.
So
now
Ira, is there a treasury auction today?
There was a 10-year. You want the results? I'll give you the results. Now you saw what happened with the European rate structures this morning, right? That was off a better French number.
Yeah, I did.
And something else that people aren't talking about. Yeah, there was a 10-year auction. The price was at 2.06, and it was deemed negative because the bid to cover was only 2.4 versus the previous auction, which was 207, and a bid to cover of 3.4.
So somebody's starting to smarten up.
Well, if you listen to actually today's testimony was interesting, and the questions were better. Even AOC behaved herself. They must have read her the Riot Act, but her questioning was actually very good. And she was just trying to build the structural foundation for MMT, which is modern monetary theory. So I have to believe those questions were written by Warren Mosler and Stephanie Kelton, who are the big proponents of it, because she was very measured today, but last time they didn't let her question him. She was supposed to, but they pulled her out at the last minute. So they must have explained to her how to comport herself. So find that, again, very interesting. But if you look at that CAD Swiss and the CAD itself, listen, the currency's been a dog.
Well, and all the commodity currencies have ripped. You got no RH day and the Kiwi. I don't know if it goes anywhere, or at least I don't know if it goes more than another 25 ticks.
Yeah. But the commodities have performed well. We're still, you know, we talked about that level on Monday, 445 and a quarter in the corn.
Yeah.
Yep. And we backed off 14 cents from there. And now I'm waiting for it to close over it. And then you know what? Then I think you're going to see some major movement in the grains. That's just my feeling.
Well, you got deliveries on Friday, and I love this low in the no because it came down and started picking up the main numbers.
Right. I know. You know what? And again, I'm looking at Archer Dana and Bungie. Just every day is on a crawl upward. It's not doing anything great. Nutrient is not performing well. It's the fertilizer, so they may not think that there's much to play in there. But I have enjoyed watching what Bungie's doing here.
I can tell you, I've been meeting yesterday. I've been in more meetings this year than I've been in any other year in my career. And in
that's up.
Yeah, it's so. Hey, the RSX is up. I'm just looking at it for the first time today. I haven't looked at it whatsoever.
I haven't looked at it in a couple of days. Hang on a second.
Yeah.
Oh, yeah. Yeah, and that's just going, that's a big gap and go off of oil.
Yep. Yep.
What's the ruble doing? Yeah, the ruble's stronger today, too.
Yeah, well, that's what, the oil, you know, it's just a fallback position for it. But, you know, there's really a lot here. And it was interesting listening to Powell because he's very aware of the great amount of uncertainty that exists out there. He is. And, you know, and Rosenberg would suggest that, of course, that he would cut 50 basis points, which to me, that's what I would do. If I was going to make the effort to cut, make it as big as possible and say, okay, the market was anticipating this. We're done. We're going to watch the way things play out here for a while. We're not going to be on the move. And I would tell the market that I don't know what they're so friggin' afraid of. You know, they're just afraid of markets. They're afraid that they're really not in control of financial markets, and they want to believe that they are.
Yeah, I just keep going back to the names that are going. That are, you know, it's all the internet stuff. You know, it's Amazon and Google are the big leaders.
Yeah, but look at the Fed funds contracts today. I mean, off of Fed officials, you don't see moves. You know.
Hang on a second. I got to flip over to that chart. I didn't even see that because I was looking.
Yeah, it's up 7. It's up 7 ticks, which is a huge move. On you know.
Look at this. I mean, that's a giant move.
Yeah.
Am I looking at? You guys see the right chart there?
That's the 19.
Okay, you want the 20s?
Well, it's up to you. I just want to make sure you knew it was 19.
All right, those are the nodes. Well, they're the 20s.
Back above momentum.
Yeah, it's right on momentum on the 20s.
All right, let me talk about one last thing with you because you saw the movement in the European bonds today, right? Although the Italian held, so the search was on for some, you know, purchasing of. Actually, I put on the butterfly today. I've been out of it for a while, but I bought German, I sold French, and bought a little Italian. I don't believe me, Italian. As much as I love to play in these places, on an overnight basis, it scares me because anything can come out. But the Germans had an auction today. Let's see. Let me go get those results. Of course, you would never know it from CNBC because they're not going to talk about it. That may actually people may want to know that. Let's see. Well, Italian retail sales. Wait. They did a bond today. I know it. Let me go dig it out. That's not it. Okay. Hold on. I'll find it. Germany. Bunds. Germany sells new Bund. So, that, you know, Judd, this is when you asked me about those gaps.
Yeah.
So it's the price of the bond. So they sold a new bond this morning, a 10-year. I'm reading, this was 8 hours ago, it was posted. Germany has sold new bonds that do not provide investors with regular interest payments for the first time. Well, there's a reason for that, because they're negative. So you can't issue a negative coupon. So you're basically issuing a zero price bond where the only reason you buy it is that you hope it appreciates. So you're paying a premium to par to own the bond. Well, par is whatever the course they sell it at, so that's technically not true. But there is no coupon. And the country sold bonds at a yield. They sold these at auction today at negative 26, the lowest on record for the debt of this maturity. The negative yield means investors who buy the paper will get back less than the amount they paid when the bond matures, and so that's how they price it. Demand, however, ebbed, with government receiving bids of just 1.25 times the 3.15 billion that was offered, and that's down on the bid to cover ratio quite a bit. Wednesday auction marks only the second time Germany has launched a new 10-year bond issue that offers coupon payments of zero. According to an, so that's what they did. There's no coupon to it. So let me ask you, French rates are negative too. So would you buy a French rate with a negative coupon? So they're in the same bind. So why they chose just to pick on the Bund, especially today? So that's worth noting. It's very important. Nobody's talking about it, but.
So Ira, I think what you're saying is you get a better deal by buying existing 10-year OAT versus the new issue Bund.
Well, you would, because there's probably a coupon that you could clip and get some interest, but that's going to disappear the next auction too. So now I was driving my daughter to the airport with the baby when he talked about the yield curve, so I didn't hear exactly what Powell talked about on the yield curve, but he did get good questions today. Well, not all of them, of course, but there were a better line of questions. And don't forget, these people don't write those questions. That's what think tanks do. They're paid. So when you get like Brookings, or you get the Center for Economic Policy, they're the ones who are writing the questions. That's what they get paid to do. So when you think that they're bright, don't think, change your tune really quickly. Sorry.
Wow.
Sorry. I'm just telling you the way it is.
Yeah, well, we know that.
Okay.
These guys, because even on CNBC, if the producer who knows nothing about financial markets is the one asking the questions.
Right, talking in their ear. That's right.
Yeah,
but
they know nothing.
I felt bad for the one guy, and Jerome Powell was a real gentleman because he didn't correct him, who didn't know the difference between LIBOR and Libra. He was totally confused. But I will tell you this. Pay attention to Facebook here, because Facebook went up on this issue of the cryptocurrency.
Yeah.
This is not going to be a smooth ride in any way, shape, or form. You can see that Congress is concerned about the power that Facebook is going to have, and the Fed is concerned about it. So they actually ferreted out a lot of discussion on that. I guess we'll see more tomorrow in the Senate testimony. Those questions are generally better anyway. So pay attention to see if they keep pursuing that line, because this is not going to be a glide path for Facebook to embark upon this. No how, no way.
Well, the big number in Facebook, the whole enchilada, is 204.84. And that was the July 6th, the July 2018 breakdown, where we went to 120 in Facebook.
Yeah.
That's where it wants to retest. So it needs to stay above that to go.
There's that famous rock and roll song, breakdowns come and breakdowns go.
Judd, what was that number again?
It's up. Do I have it up? Am I looking at the right, everybody? Do I have everybody on the right screen? 204.84. Yeah, 204.84. That's the weekly breakdown from July 2018. We're already above all the monthly levels, but now it's up, because the monthly breakdown was 186.43. So now it's going to the last breakdown number, which is 204.84. So it needs it needs to sustain over that for another leg up.
That's a good point. Thank you. Thank you. These are important levels to, we're here. We're in such interesting areas, and you wouldn't think that there's all this risk. It's one of the better parts of that podcast, and I would implore your listeners I don't think you can get a better podcast with three people who are not trying to show each other up, but actually having to have a real discussion, and with a moderator who allows the discussion to take place. I thought that was significantly important.
Yeah, I dropped it into the room this morning, Ira, after you sent it.
Yeah.
Ira, did Peter talk about how he would like to see rates not be cut?
Yep. Yeah. So him and Rosenberg are certainly not in the same camp. But as you can hear with Powell today, I think that proverbial ship has sailed.
But you've got so many different things going on right now. The last 2 days, if you would have just looked at the transports, you'd be short everything in sight.
Right.
And,
right. That's right.
But you look at the internet names and the service names, that's what everybody's buying, and they've got momentum to the upside.
Yeah.
Workday,
because
now, CRM, now, all the internet stuff.
Well, look, they're finally, and Powell laid it out to you, that he's disappointed in CapEx spending too, and he's not seeing it. He's seeing people pull back, and that they may have they had some really good discussions, because they had the discussion about pulling demand forward, that we live in a credit card-based economy, and we pulled too much forward. So it's worthwhile discussion. And if you've pulled too much demand forward and now you're worried about some type of tariff outcome, you're not going to be investing in new capital expenditure. And the Fed, I think, it's one of the things that is really making them nervous, because they were banking on that as the economy started to expand.
That's a good point.
The Fed never did understand globalization.
It wasn't in their models. And it's like Powell is too much a gentleman. See, I'm not wild about gentlemen, but I don't like consensus-based organizations. If you're afraid to say what you think, then you know what? Get off. I feel the same about every corporate board in America, which is all consensus-based. That they do nothing but serve their own purpose, rather than embrace real discussion, which is why I hope Judy Shelton gets the job, not because I agree with everything she says. There's a lot of things I disagree with, but she will change the discourse, and the discourse needs to be changed.
Yeah, the other things we were looking at this morning too, Ira, besides the discourse, is the huge breakouts in the S&Ps against the rest of the world.
Yeah, I know you sent those charts out, and they were great to look at, and especially because by every measure, the DAX should be outperforming. It's got a worthless currency, meaning as far as interest rates, it has steep negative real yields. Forget about the nominal yield being negative. Real yields are certainly very negative. Their trade numbers still weren't bad. They have budget surpluses. They have a weak banking sector, which are trying to correct. We know that. I saw that UBS was actually, but still hanging up. But you have all these things being a positive for, although you did see the news, the BASF earnings warning. So, that has weighing. You have Deutsche Bank weighing, and the auto sector aren't really as strong as some people want you to believe. We know that, because if you go into any auto dealer, they're discounting. If you have problems buying a car, take me with you. I'll show you how to shop for a car. I actually know how to do. I'm a gun for hire. But there's deals to be made because there are a lot of cars not moving. I don't care. What was it, 17 million on the last on the monthly basis that were released for June, which weren't as bad as people thought it was going to be. But with interest rates this low, you're not getting some of this stuff. Housing prices have gone up way too much for a lot of people to afford them, regardless of how low interest rates are. And then you throw in the impact from salt, that puts salt in the wound, so to speak. So you have these things where the economy is dragging here a little bit, and that's why you're seeing what should be performing. I think the transportation, I'm looking at KSU, and KSU is struggling because of the peso hit yesterday with the resignation of the finance minister, even though the deputy minister, who has pretty good credentials, was immediately appointed in his spot. So, here's where we sit. This is what we know. And we're going to have to watch some of this unfold here. There's so many things in play here. So many. Look at oil gets that kind of jump today. What inventories are down. Okay. You know what happened to the immediacy of, but so the oil market will be back and forth. I think there's more geopolitical risk to the oil market than anything anyway, but that gets underplayed too. Nobody cares about it because, again, the Fed will come to your rescue and bail you out and assuage everybody's feelings.
Yeah, and the crude's just going from one number set to the next. It's trying to go back and, tried a couple last week and it failed, and now it's going up there this week to try to trade 60-64.
Yep, that's right.
And that was the breakdown level from May.
Yeah, and there's a sector, as we talked the other day, as underowned and as unloved as the ag sector. I mean, these are two sectors highly unloved and underowned. And yet, if there is a commodity takeoff, and I'm looking at some, I watched the Bloomberg Commodity Index, which you can get on CQG.
What is it?
BCOM.
BCOM? Boy, Charlie?
BCOM.
M.
Yep.
Oh, there. Ira, do you have any idea what percentage of that is oil?
No, it's not as heavily weighted as oil, though. I think as the what was the other one that was AI, whatever that index was, or the Goldman Sachs index. I don't think it's. But again, I'm not positive.
Or the versus the CRB.
Right. Thank you. Yeah, it's been so long since I've watched the CRB. Let's see. I can't even pull that up because I'm not authorized for any of that.
Oh, I got that. So I actually the CRB is taking out the 200-day. I never watch this anymore. The 200-day came in at 183.34. It's trading 184.19 right now. It's a gap higher today, believe it or not. That's on the CRB.
Yeah, I can't pull it up. It must.
Okay.
I don't know where it's. Is that a American Stock Exchange or Philly or something?
No, it's owned by somebody else.
It's the Thomson Reuters. The old CRB. It's called Thomson Reuters. Right. Core Commodity CRB Index.
Well, maybe I'm just not putting it up.
No, they have it on CQG. I just put up CRC.
Oh, CRC. Well, let me try that.
Yeah, see what comes up. Try that.
I get California Resources Corporation.
Hold on, let me put up CRB, see what comes up. Oh, I did put in CRB. I'm sorry, it did come up.
Yes. Well,
it's the spot index.
Oh, wait a second. Do I have to put $1 first?
I didn't. I just I punched in CRB. Yeah. Put in CRBC. See what happens.
Now I'll have to find out what it is.
How about BCOM? Does that come up?
No, BCOM.
Yep.
I get a stock.
Nope. So you're not You got to run up a bill as big as I fucking
a month.
Oh my God, it's ridiculous. I'm really thinking about looking at Interactive Brokers. Everybody said their data is pretty good.
Well, I got somebody else for you if you want the commodity stuff. And I've been talking to him, and I had him come in, and I did a remote with him yesterday. And, you know, because I need him to be able to do the spread bars and give me all the historical data. So right now, they haven't gotten back to me on if they can replicate it or not.
Oh, Judd, I forgot to tell you. I reached out to TradeStation, and they sent me a screenshot of their S&P chart going all the way back to 1982.
Wow, August 1982, I sold the low.
I bet you did.
I damn well did. Bearish as could be. August 1982 when it opened. 15 minutes cost me $1,500 as fast as I could turn my head. Oh, yeah, another one, my bonehead.
Well, that's okay. I was sitting on San Francisco Bay underwater, and the only trade I wanted to do was buy the breakout above the opening range at 116.25. Think about that. We're trading at 30,000, and I was underwater on a boat and never got out.
I think I sold 101.95. Let's see if that's right. Oh yeah, there she is, baby. April. I'm sorry, April of '82. It opened up at 120, went down there. I was selling the whole August. I know the August. There it is, 101.15. I guarantee you that's my tick.
Yeah, and one.
Oh, hey, wait, hold on 1 second. I got Santelli. Hold on, I'm gonna put you on hold.
Okay. Yeah.
So Rick, Judd, they sent me a pit chart because I asked them if they had pit data going all the way back.
So 116.70 was the opening range of the S&Ps. It was the only trade I wanted to do. Yeah, J24 is underwater with, you know, all 145 pounds of me sitting behind one guy that was 6'2", 6'7", and 6'3". And the other guy was an All-American hockey player and a gold medalist. He was a little large. Yeah. Once it broke out in October, that was a stone cold low. The first week in October, 1982 was the breakout in the S&Ps. So yeah. Yeah, I don't know if I know Jeff uses TradeStation. He's in the room. I don't know if he can get all this stuff up or not. You know, he seems to be fairly happy with most of his point and figures. You know, but I need the stock screeners. I need the pattern recognition. I got to have all this other stuff, or I can't do what I do for you guys.
Yeah, I know. I mean, I did that test. You know, I pinged them and I was like, look, do you have the S&P pit going all the way back to the beginning? And it took them 2 days, but they sent it to me. And I'm like, all right, well, that's encouraging. Yeah.
I mean, the problem is that all these other guys don't have, you know, all the capabilities, and the sales guys telling me, yeah, we just got 2 guys that are working here that just left CQG. Nobody wants to be over there. The only thing they're supporting is their order entry, which is what PAX uses.
So Judd, just pick one item on your pattern recognition software, right? And just tell me like what the triggers are. Is this it right here?
Even here, see all this stuff?
Yep.
This is all, here, I'll show you.
I think they can do this stuff because I've seen setups like this.
Yeah, well, here. Now, this is all, here, 200-day cross. This is long. This is platinum yen, okay? 50-day cross. So you get, you see the blue and the green?
Yep.
And then this one is it just tells you it's going up. So you get the crosses to the upside because the arrows are up, right? And it tells you to look at it. So all I have is this whole thing color-coded to tell me to look at stuff that's in play. Okay, so here are the oats. Crossed over to the downside below the average. So, so that's just this portfolio monitor, okay?
Now, Judd, let me ask you a question. Is any of those columns the momentum line from the chart?
No, This is totally different stuff, okay?
Okay.
So if I go to my other one, and I'll pull it up. Okay, so on this thing, all I'm looking for is reversals. I'm looking at an engulfing bull, engulfing bear. Here, Kiwi's a good example, okay? It's green, engulfing bull, and ORH. So you can see that it started out as an engulfing bull pattern this morning, and that one came up. And then as it got above this high, the arrow came up that said it was an ORH pattern. So when I see these and I go through any of my equities or stock screeners, it allows me to click on them and see what's in play. Versus finding out a day or two later, I want to know right away if it's in play.
Makes sense.
So, I need to have this stuff replicated, or I don't want to switch no matter how much these assholes are charging me. Oh, well, I'm glad I'm recording all this. Maybe I won't send this recording.
Be a daredevil. Go ahead and send it. I mean, you probably should pause it while he's chatting with Santelli.
Coupon bond from Germany. I said, yeah. He said they started talking about it on CNBC, and Leisman said, why is this even a concern? So he was like, jelly, but I didn't help him. I fired him up more. I said, yeah, I was just talking to these guys before I even talked to you that we were, discussing this. This is an important thing. He said, yeah, I agree too.
Did Santelli tell him to go back and play his freaking guitar?
No. Rick is.
He had his dead shirt on, and he was still having an acid flashback from the concert.
Oh, it's okay. Who am I to say, orange sunshine, baby. A little window pane. We're all good here.
Hey, Judd, to hit the pause button, turn it back on again.
Yeah, I did.
Okay, I don't know where else that leaves us, but I'm sorry for the gap. But
no, that's all right. So I'm just looking at the transports again, and how ugly they look. And if they follow through tomorrow, it's not, it's going to drag everything back down. I can make a case of a false breakdown today, but, I want to see what it does tomorrow.
Yeah, it'll be interesting to see if anything changes in the Senate testimony. But I'm telling you, the minutes were meaningless because they totally reflected, and they were sanitized to reflect exactly what he just needs to let it happen, unveil some of this by itself. But what can you say? Everybody, and it's, again, the banks, the banks are stuck in this position, and, you can celebrate it as long as you're long the equity markets and you're the benefit of what, and I don't just mean the Fed, but global central banks are doing, because you've benefited immensely. They have elevated equity stocks all over the world. And as you see, I'll say it again. And I think Rick has really come to understand what I've been yelling about. Monetary policy is being made in Frankfurt. And today's German bond auction says it 100%, because I can go back years when we could buy zero coupons, but you bought them very cheap. You didn't pay a premium to own them, which would mean you'd suffer a loss if you hold them to duration. So we're back at the great Richard Dennis's solar fool theory. I can't get away from it. It's why else would you do this?
Oh my God, Ira, it dawned on me. You're right. We have a new definition for zero coupon bonds.
Yeah, the solar fool. Hopefully, I'll be able to get out before you. I believe I'm smarter than you, and I'm going to be able to get out before you.
God bless you.
Yep, and that's the operative mindset. There can be no other. I challenge any investment, anybody who manages investments, to ask why you're buying it. Or if you're buying the German, you better be selling some other stuff. And you can't sell the Italian because everybody's chasing for yield, and that's that problem. So when you get a bad political headline, we know what the impact is going to be, don't we?
Oh yeah. Look at this. Yeah, and the Bunds came down, the Italians came down and still didn't fill that gap. It just missed it by a couple of ticks.
Yeah,
38. They came right down there before they bounced again. I mean, my momentum line on the daily comes in right there, basically.
What a mess. And it's just, they've you know what, and the questions were really pointing at things that the Fed may have done wrong, and especially with their beloved Phillips curve, which has driven me crazy I happen to agree, I laugh about it with Santelli. One day I said I'm going to wear a Nehru jacket on, because when they speak Nehru, they mean the non-accelerated inflation rate of unemployment, another word for the Phillips curve. But I mean Nehru, the huge amount of Indian consumers and workers coming onto the global stage. So I wear a Nehru jacket.
Ira, other than private equity Powell, all right, because that's his background. What other Fed chairman, going as far back as you can remember, actually had market experience?
Well, let me put it this way. Market experience, not market experience. Who respected markets? Let me phrase it like that. So I believe Paul Volcker had great respect for markets, which is why he had his ear to the tracks all the time and listened to what they were trying to tell him. That's when you really had the rise of the bond vigilantes, because I think Paul Volcker celebrated what markets, the signals that they would give him. Because and Paul Volcker was a man with phenomenal experience in the U.S. in the Treasury Department. I mean, he knew what he was talking about, especially in the global macro realm. But he knew and appreciated what markets were trying to tell him at any time. I think when Greenspan first got to the Fed, he was a markets guy. And if you go back and read his early stuff, he was a markets guy. But I think and I was interested in listening to Joe Kernan this morning, because he asked Pat Toomey, I think, I forgot who the guest was this morning. I thought it was Senator Toomey. And it was
I think it was.
And he asked him, he said, well, how many? He said, well, I've been here for 3 Fed chairmen. And I said, well, that's kind of interesting. But he talked about, and he knew it, and he came from I don't know his background, but he definitely came from the investment community. And he talked about, boy, he said, when I started, you couldn't even name the Fed chairman. When did all this change? And Joe Kernan is trying to answer the question. And I'm going, you giant ass. It changed because CNBC elevated Alan Greenspan to a mythical figure. That's what happened. You know what? You never had Fed chairman coming out to speak. Whatever they had to say, they'd say. Alan Greenspan, he loved the buildup of the myth, because he's famously said, if you think you understood what I said, you must have misheard. And he liked that they called him the Oracle, right? They compared him to the Oracle of Delphi. So you want to point your finger at the development of business news to the extent that elevated the role of the Fed chairman. And I think that once Greenspan got elevated to that role, he lost his respect for markets and felt that he could contain them.
I think they called him the maestro.
They did, and he loved it.
Egotistical bastard.
Yeah.
Gold and Money, 1966.
Oh, yeah, the piece he wrote for the Ayn Rand Foundation. I've read it more times than I care to ever admit.
I still have a copy of it on my computer.
Yeah, as you should. It was worth a great read for it. I really appreciated reading it at the time. And when he worked, I'm old enough, as Judd is, he had a firm, Townsend Greenspan, that did research, Wall Street research.
I remember that.
Yeah, it was actually pretty good stuff. And I think it was his exposure to the population in that way of the maestro and this mystical proportional. And he loved it. He loved promoting that. And the media allowed him to promote it. They were in awe of him. Oh, let's go back to the Time magazine cover of 1998, The Three Men Who Saved the World, Bob Rubin, Larry Summers, and Alan Greenspan. I said it that day it came out. They destroyed the world. I believed it then, and I believe it to this day. They destroyed the world. Forget save the world. You know what? Again, it's the media wanting to we're supposed to worship at the altar of these asses. That's all I can say. We're supposed to, because they want to make them into mythical figures. It destroyed the world. And I have a piece, and I've published it in my blog from August 30th, 2002. Somebody could bring it up. Letter to the editor at the FT. My original piece that the FT wouldn't publish was labeled Greenspan as a moral hazard. And it was so incendiary for them, they wouldn't publish it. But when I toned it down and just had it as a response to Glass-Steagall, it actually got published. And so I don't have one copy. If I read it to you, you'd laugh. Because it details, and Greenspan, and I blame Greenspan, I called him a moral hazard, because he sat there, not only sat there, he helped promote the repeal of Glass-Steagall, which I always believed was disastrous for the U.S. economy. Disastrous. And it proved so. And even Sandy Weil, who was the great benefactor and promoter of it, because don't forget, he's the one who brought Bob Rubin to the, well, Rubin, of course, was at Goldman, but Sandy Weil and him, were very close. And they got behind the push for the repeal of Glass-Steagall. And when it finally occurred in 2001 or 2, with the Graham Bliley Leach, and I have stories about that too, but it was easy to see, and you just had to pay attention to it, as I've talked about before, because as long as you had FDIC insurance, you could not afford to allow commercial banks and investment banks to be in the same business. Just couldn't, because that meant that the public was taking on all the risk. But and so I'm laughing as Joe Kernan is trying to figure out when did this come to pass. I'll tell you when it comes to pass. When CNBC started bringing out, and it's not only Fed chairman. Now you got every Fed person, because I understand that they actually want them out there talking. That part of their pay is dependent upon how much they talk. I don't know that factually. I've just been told that by some people.
Yeah, well, and how else are they going to get a paycheck after they leave?
Well, absolutely. Whether they sit on corporate boards or get a big job, watch where they all go when they walk out that door.
Yeah, well, not everybody. Like Bernanke can get a sugar daddy like Griffin.
Yeah. Well, listen, no, they all go. They all go somewhere.
Powell's just going to go back to Carlisle.
Oh, no question. How about Kevin Warsh? He's on some big boards. So I think he's on Carlisle's board now too. But I like Kevin Warsh. I thought he was a guy who spoke his mind and said it as plain as day. But he was too independent for Trump to a point. Remember, Trump was considering him for the chairmanship because people who were really intelligent told him this is the guy you got to have. But he was far too independent, and that's what I always loved about Kevin Warsh. You could smell his independence going, No, you know, I've already been successful in this business, as Jay Powell should, and just stand up and say, hey, but Jay Powell doesn't like that he has the burden of the world on his shoulders. That's the feeling I get from Jay Powell. It's a lot to ask. You know, not everybody's cut out for that. Not everybody can, you know, can land at Normandy. You know, not every, you know, it's like Lincoln always talked about, get me a general who wants to fight, which is, you know, why he put up with Grant and Sherman. But Grant being the drunken ass that he was, but, you know, he had McClellan, George McClellan, who never wanted to fight. He had every reason. Lincoln kept giving him more ammunition and more troops, and he kept finding a reason why he wasn't going into battle. So not everybody is cut, or is, what's his name, Hubie Brown told a friend of mine who went to that Las Vegas basketball camp. You know, no, Hubie Brown was there, and they were having breakfast one morning, and he made a comment saying, hey, you can't believe how many so-called NBA superstars do not want the ball at crunch time. Well, you know what? I don't think Jay Powell wants the ball at crunch time.
Here's another. Brian just put a comment in here. He said he's reading Volcker's autobiography.
I just read it. Yeah, I read it too.
And he just, his statement was in numerous interviews how being a city manager, his father being a first-generation city manager,
right,
helped him.
Right.
Understanding
tremendously.
Yeah.
It's a great book. I recommend it to everybody. First of all, I'm such a Volcker fan. I think I've read 3 of the books he's written. I wish he's going to die soon from what I hear. He's not well. He's done a lot of great things. Really, he's a man, and they abuse him. You know, they abused him on the Volcker rule. They just needed to put him in there to give it credibility. My only problem with Paul Volcker is that he's an emeritus member of the G30, and I have nothing but disdain for the G30 as a private entity. I just don't. I think it's an abomination, and I say it as a market practitioner. And you can say, well, yeah, that's because you wish you were part of it. Okay, but if I wish I was part of it, they must be exchanging ideas there that give the participants a leg up on everybody else. And there's too many guys who get paid by the private sector who partake in it. That's all. And I'm kind of surprised that he was involved. You know, I always expect Paul to be, well, but he'd probably argue and say, well, they do good things there. And you know what? Who am I to argue with Paul Volcker? I hold him in the highest regard. I think he is the greatest American of the last 50 years.
Yeah, well, he was great.
He was great. He was great.
And I love watching him chew on a cigar.
Yeah, he's 6'7". I don't want to stand next to him. But it's humbling. And, you know, he's a humble guy. You know, everything I like to. I really, and that's a great book. So I applaud who's ever reading it, because you really get. And he's not, you know, he's not a fan of the Phillips curve. Never was. And he's, what else does he come out against? He comes out against QE and the continual QE and inflation targets, by the way. I don't know who's reading the book. Who made a comment?
Brian Silcott is in the room, and he's
adamantly opposed to inflation targeting, because he thinks that it's such a mythological number. So if you miss it by 0.2 of a point, that should affect you. You know, and he states it several times in there.
It's pragmatism. It's going out the window.
Yeah, that's 100% right, Chad. Couldn't phrase it better myself. Okay, anything else we want to work on?
I need a lot of work, but I don't have a couch that long.
Yeah, that's right. That's right. You know what? I've had a great week with you. You guys have really got me focused. I've really traded well this week because I've been focused, because, you know, the questions, I wish there were more questions because I could deal with them. I like questions, and I like tough questions. So
yeah, a lot of guys are out right now. They've left for the day, so yeah, but we'll do it.
All right. Yeah, because if I tell you I'm going to come on, you know, have the questions beforehand, and then I can really speak to what everybody wants to hear.
Okay.
Okay, so I think it makes it for better. And again, that podcast with Bookfire and Rosenberg is really worthwhile. And I'm blowing my own horn, but hey, if I'm not going to, who's going to?
Yeah, well, I got to finish listening to it. I haven't had a chance all day.
You'll enjoy it. I'll tell you when I think I do something good. I'll tell you. And these have been good. You know, you see what I've written about them in the blog, so I've enjoyed them. So.
Well, yeah, and I like both of them. So it was. Yeah. I listened to about 30-40% of it.
Okay, good. All right. I'll talk to you guys. Thanks for giving me the time.
Thanks, Ira.
Okay. All right.
Bye. Okay.